Today I'm using the US dollar as my backdrop in this video because the US dollar really has been affecting what's happening in the stock markets around the world and the bond market. So we'll talk a little bit about the US dollar today. We'll also talk a little bit about what happened last week in the markets and what should be expected this week coming up. There's a lot going on. If we take a look here as a reference point, we've got the S&P 500 down 1.5% last week. The worst performing sectors of the market last week were the growth sectors. We had consumer discretionary sector down 2.3%, communication services down 1.2%, and the technology sector was down 2.8%. Now, a lot of that had to do with the announcement of the US banning NVIDIA from selling their H20 chips to China. Utilities was positive. The energy sector was a big, real estate was positive as well, and the energy sector also performed well. The energy sector has been coming back here a little bit, has been a little bit volatile, but overall has been performing well. If we compare what's happening in some of the key markets around the world, if you take a look, S&P 500 down 1.5%, Europe up 4%. Now, this is really an expression of people or investors leaving the US and going over to Europe because the European economies really aren't that strong. China was up 1.6%, emerging markets. TSX was up 2.6% last week. That's a huge difference between the Canadian stock market and the US stock market. That much of a difference is quite unique. A lot of that had to do with the technology sector not performing well last week. If we take a look at some of the key sectors or subsectors of the market, gold was up 2.8% last week. I'm shooting this video on Monday, April the 21st, before the market opens. Now, during the week, on the weekend, I should say, Trump tweeted out or posted that he who has the gold makes the rules. So we've seen gold actually go up on the weekend in the futures contracts as well. We'll have to see what that cryptic message means a little bit later on, maybe. Gold miners last week was up 2.5%. U.S. banks have been doing surprisingly well. They had some okay earnings, but it's a little bit of a relief here. That's actually a good sign for the market. Could help to stabilize the market when the banks actually do well. It's something you want to see. Last week we did see the yield on the 10-year Treasury note head lower, which was a good sign because in previous weeks we've seen the U.S. 10-year yield come under attack and rise because investors were fleeing that part of the market. So this does show a little bit of stability, which is fairly good news. However, if we take a look here, first of all, at the Canadian dollar versus US dollar, the Canadian dollar went up in value 0.2% last week, closing at 0.723, which is the Canadian dollar stronger. But if we take a look at the US dollar relative to world currencies here, we can see that the US dollar actually went down using the Dixie, and it actually went below 100, which is a key level here, and it lost 0.7% last week. Here I am showing you the graph of the S&P 500 in a downtrend. Something happened last week. We saw the S&P 500 suffer a death cross. Now, I wouldn't read too much into it. Sometimes it works and sometimes it doesn't. But a death cross basically indicates that the market's rolling over. It's when the shorter term averages are catching up with the longer term averages in a downtrend. And that is when the 50-day moving average, in purple here, catches up with the 200-day moving average, which is in yellow, and that took place on April the 14th. A lot of investors took note of that as a negative sign for the market, and it can indicate that the market could actually be suffering a little bit more of a downtrend at this point. Actually, there was a double death cross last week. If we take a look at the Dixie, which is the US dollar versus world currencies, we can see here this line in red, which is a 50-day moving average, crossed below this line in orange here, which is a 200-day moving average. Now, in this case for the currency, I wouldn't read too much into it at all because this does happen here, especially in a sideways trend. It's being whipsawed back and forth. But it is important to note we did close below 100, which is a key level of support for the Dixie at 99.397. If we start to move much lower than this, we could see this erosion take place. So far, this was quite a fast down trend here taking place. It really caught investors' attention, but we didn't break any key levels here. But being below 100 for the Dixie is not a good thing. We'll have to see if this corrects over the next little bit. One of the reasons that the US dollar has been heading lower is that foreigners have been selling US equity funds. And we can see that right here. This is quite a big drop compared to historical averages going back. We did see that back in 2022 a little bit here on a short-term basis, but this is quite a big drop, and that means that foreigners will be selling at U.S. equity funds and mostly would be taking that money out of the US dollar, which would be putting downward pressure on the US dollar. A shameless plug here, this is my Thackeray's 25 April newsletter. I did get into the what's happening with the US dollar and what's happening with US government bonds as well, a little bit in the newsletter, as well as many other factors as well. I do talk about the trade war and how this situation in China is going to be extremely difficult to resolve. A lot of investors think that it's just going to be negotiated away, and there's stories about negotiations taking place, but it's because of Chinese culture, it's very difficult for China to come back and make a deal that makes them look weak at this point. So anyhow, just check out the newsletter if you get a chance. It's on my website, alphamountain.com. This is a post that I have here, and if we take a look here, investors have rarely been this bearish. Now, in the past, investors will say that's a good sign because from a contrarian, I'll actually use that as a positive sign that when the markets or investors were really bearish, that's a good time to get into the markets. But we've seen the markets really continue to go down here despite the bearishness. So we've seen investors really coming in and trying to buy the 10% dip in the S&P 500, or the 20% dip in the S&P 500, but there's still a real bearishness out there that just hasn't been resolved. What's interesting is that retail investors really haven't given up on this market despite the bearishness. If we take a look at levered long ETFs, they actually increased recently as well. So investors really are trying to buy this dip here, and there really hasn't been any sort of real capitulation as the market's gone down here. So it's going to be interesting to see how that's played out. This is mainly retail investors. This is mainly a sentiment gauge of retail investors. There's a lot going on this week. Early in the week, we got the IMF meeting, then we got the PMIs coming out this week, and we have earnings. Now, earnings, I think, are key. So far, we've seen earnings, and I'll get into this in a second, have not been great across the board here, and it's difficult. It really is difficult in this uncertain economic environment. We're seeing companies actually coming out now. We saw this with United Airlines last week, give two forecasts and say, look, this is the likely scenario if this happens, and this is the likely scenario if this happens. Bank of Canada did exactly the same thing. They came out and said, if this happens with the tariffs, this is the most probable scenario, and if this happens with the tariffs, this is the most probable scenario. So, but it's just the uncertainty around the whole global trade and global currency wars that are taking place here at this point, and companies just aren't coming out with really strong guidance, which is a little bit concerning. So we really need to see that develop this week. On Tuesday, investors will be paying attention to Tesla coming out. There's a lot of big companies reporting this week. Wednesday morning before the bell, we see Boeing, IBM after the bell, as well Newmont after the bell. Thursday, we got American Airlines. It'll be interesting to see how they report. Some concerns from the airline companies about their growth on a go-forward basis here and how they're adjusting to the capacity. And we have Intel on Thursday after the bell, and a lot of investors will be following Alphabet as well. So it's going to be interesting to see what happens as far as the earnings reports this week. And we really need to see some sort of stability taking place. Usually the stock market does well coming to earnings season. As investors anticipate strong earnings, but the earnings really haven't been that great yet. In fact, if we take a look at the earnings here, we can see that first quarter estimates, earnings are up 8.1% and the revenue's up 7% now. So how does that fare relative to expectations? Well, 67.8% of the companies have beaten their expectations for earnings. Now, that may sound like a good number because it's above 50, but relative to long-term averages, this is actually a little bit below average. So this is not a strong number here for the earnings. And on the revenue side, only 54% of the companies have beaten their revenue earnings expectations. And this is probably the more concerning aspect here, because companies have been doing cost cutting to try to bring their costs down, which helps them with their earnings. But the revenue, as far as the sales goes, only 54% of the companies beating their expectations is not a good sign overall as far as the economy goes. So it's going to be a difficult one if we see some companies struggle this week with earnings as well. I want to finish this video with a graph of the S&P 500 to show where we are right now. First of all, we're at 5282. And I want to show that the S&P 500 back in 2022 actually went through a death cross. So the 50-day moving average crossed below the 200-day moving average. And then in 2023, early in the year, we saw the 50-day moving average cross above the 200-day moving average, which is called a golden cross. Yes, a golden cross, because it brings good things. But overall, you can see here that the death cross situation was a negative for the S&P 500 overall. I want to point out that the S&P 500 still isn't a downtrend. That line's not very good, mind you, but it still isn't a downtrend. That can be corrected quite easily. Investors are really following this 5,000 level. We did see it break, the S&P 500 break below that temporarily or quickly, and then bounce higher as the buyers stepped into the market. But investors will be following that level again. If we break below 5,000, that could be quite concerning. It's going to be an interesting week. Lots happening. It's incredible the developments taking place, whether it's tariffs or announcements or tweets or bond movements. So there's a lot of moving pieces this week in the markets. It's going to be interesting to see how the market ends up at the end of the week. Thank you very much for joining me today.